One single late payment can feel like just a small slip-up, right? But honestly, it's one of the quickest ways to absolutely trash years of your hard work building good credit. It's a total gut punch financially that can get you denied for loans, cost you thousands in extra interest, and just haunt your credit report for years. But here's the good news. It's not a life sentence. We're going to break down exactly how this all happens, and more importantly, how you can fix it. Just look at this number, 110. That could be the drop your credit score takes from just one payment getting reported as 30 days late. And here's the kicker. If you have a really high score, the fall is even harder. A drop of 60 to 110 points is totally common. It feels like a crazy penalty for one mistake, so why is the damage so severe?
Well, to get why the hit is so hard, you have to look at what actually makes up your FICO score. And, 90% of top lenders use FICO. See that massive slice of the pie? 35%? That's how much of your score is based on just one thing, your payment history. It is the king of all the factors. And that's exactly why a single late payment sends this huge red flag through the whole system. It screams risk, and the scoring models are built to react to that risk instantly.
So here's our game plan. We're going to cover the 5 key things you have to understand. We'll start with the problem, right? That critical 30-day window and how the damage gets worse. But then we're going to switch gears and focus completely on the solutions. What to do right away, a really clever strategy based on your relationship with the lender, and what your legal rights are for fixing any errors. Let's get into it. First up, the 30-day danger zone. Seriously, this is probably the single most important idea to wrap your head around, because this is where the real damage actually gets triggered.
Okay, here is the absolute key, the 30-day threshold. So look, if you're a few days late on a bill, yeah, you'll probably get hit with a late fee. But that's just a private matter between you and your bank. The real damage, the public hit to your credit score that everyone can see, that doesn't usually happen until you cross that 30-day line. That's the moment your creditor gets the green light to report you to Experian, TransUnion, and Equifax.
Let's just walk through this timeline. From day 1 to day 29, you're kind of in this grace period. You're going to face fees, maybe a higher interest rate, but it's all contained. It's just between you and your creditor. But on day 30, boom, everything changes. The delinquency can now be broadcast to all 3 credit bureaus, and it becomes a part of your financial story for a long time.
So that first 30-day hit is bad, for sure. But believe it or not, it's really just the beginning. The damage actually escalates pretty quickly from there, and the consequences get much worse.
This chart just lays out the escalating disaster perfectly. 30 days late? Okay, that's the first red flag. But then you hit 60 days, and now lenders are looking at you as an increased risk. By 90 days, you're in major delinquency territory, which sounds as bad as it is. And after 120 days, well, your original creditor might just give up, charge off the debt as a loss, and sell your account to a collections agency. Each new step carves deeper into your score and your reputation.
And this isn't a short-term problem we're talking about. That late payment is going to stick to your credit report for 7 years. Now, the good news is that its impact does fade over time, especially as you start bearing it under a new positive history of on-time payments. But for 7 years, it's going to be there for any potential lender to see.
And this is why it matters in the real world, right? It's not just a number. A late payment can lead to you getting flat out denied for a mortgage or a car loan. And even if you do get approved, you're going to face way higher interest rates. We're talking about something that can cost you thousands and thousands of dollars over the life of a loan. It's a very expensive mistake to make.
Okay, enough of the problem. Let's talk about solutions. Here is your immediate damage control plan. These are the absolute first things you need to do the second you realize you've missed a payment.
Think of this as your emergency playbook. Step 1, pay immediately, right now. Even just paying the minimum amount due stops the clock from ticking towards that dreaded 60 or 90-day mark. Step 2, get on the phone with your creditor. If you have a good history with them and this is a first-time mistake, they will very often waive the late fee as a courtesy. Step 3, set up autopay. For at least the minimum payment, this prevents a simple memory lapse from costing you 100 points ever again.
All right, let's level up our game with a more advanced technique. I like to call this the Goodwill letter gambit. It is a really powerful strategy for asking your creditor for a second chance, even when, technically, you were the one in the wrong.
So what in the world is a goodwill adjustment? Well, it's not a legal dispute. It's really just a polite request. You're asking your creditor to remove an accurate but negative mark from your report. You're basically appealing to the good relationship you've built with them, often explaining some kind of extraordinary circumstance that caused you to slip up.
Now,
For this to have any chance of working, the letter has to be pretty much perfect. You got to start with the specifics, account numbers, dates, all that. Then you humbly explain what happened, maybe a sudden job loss, a medical issue. Acknowledge your mistake, but then immediately pivot to your otherwise great payment history with them. And this part is crucial. Explain why you need it removed. Maybe you're about to apply for a mortgage, and this is the one thing holding you back. And the golden rule through it all, always, always, always be polite.
This line right here, it perfectly captures the tone you're going for. It's respectful, it's direct, and it positions your request as an appeal for kindness, not a demand. This is a relationship play, not a legal fight. But what if the late payment on your report is just plain wrong?
Well, that brings us to our final section, disputing inaccurate late payments. This is where you shift from asking for a favor to actually using consumer law to fight factual errors on your report.
The key to this entire strategy is a federal law called the Fair Credit Reporting Act, or the FCRA. Think of it as your legal shield. It guarantees your right to have an accurate credit report, and it gives you the power to challenge any information you believe is wrong. When you file a formal dispute, the credit bureaus are legally required to investigate it.
So, where do you find these errors? Here's a pro tip. You need to pull your credit reports from all three bureaus and lay them out side by side. You're basically hunting for inconsistencies. Does Equifax say you were 60 days late, but TransUnion says it was only 30? Does one report's summary totally contradict its own payment history string? These are the exact kinds of factual errors that become the ammunition for a successful dispute.
When you file that dispute, you have to be super meticulous. Your letter has to clearly identify every single error. You need to explain precisely why it's wrong, request that it's removed, and include copies of your report with the errors literally circled or highlighted, along with any proof you have, like bank statements. Just be professional, factual, and direct.
So let's do a quick recap of the most important takeaways. That 30-day mark is everything. You have to act before you cross it. A late payment is a 7-year problem, but remember, its sting does lessen over time. For a one-time accurate mistake, try that Goodwill letter. And for any factual errors you find, use your rights under the FCRA and dispute them.
Ultimately, your credit report is telling a story that lenders are reading to decide your financial future. And after everything we've just gone through, the only real question left is this. Are you going to let a simple mistake write that story for you, or are you going to be the one to take the pen back yourself?